Salesforce earnings were released last night, and the company not only beat expectations for revenue and adjusted earnings per share, but boosted its current quarter and full year forecasts for revenue, earnings, and margins as well. Like every other tech company right now, Salesforce mentioned artificial intelligence a lot on its earnings call. Co-CEO Mark Benioff explaining his aspirations for the company in the AI space. And to talk more about Salesforce as an AI play, we have one of the best guessers in the business, Brent Thill, a senior analyst over at Jefferies. Brent, make some sense of this quarter for us and your outlook as you continue to kind of parse through the numbers here and even the tenor of the call last night.
Yeah, good morning. The stock is going higher on margin, not really revenue. So Salesforce.com, came into the year massively overweight. They need to hit the Peloton and hit the air brakes on carbs, and they have done that, and that has seen a material outperformance in margin. The margins are continuing to improve. Revenue growth is still stuck in the low teens, and as Mark Benioff, the CEO, said, "I'm a growth CEO." They want that number higher, and we think ultimately, if you listen to all the AI hype. Today, it's not revenue. So the AI revenue wave is going to hit them. So effectively, the first wave of the stock outperformance has been on margin. The second wave should come with revenue outperformance. And, again, it's early in AI. I think they're a little behind. You're going to see the revenue from that have a bigger impact in 2024. And then I think, they've gone on a diet on M&A. They haven't done really any M&A. So the other thing that could help re-accelerate revenue growth is, do they lean back in and do some tactical acquisitions that help fill out the portfolio? So remember, the activists said, no more M&A. You got to cut your weight, get your margin higher. I don't care about revenue growth. And they set a goal of double-digit top line with high 20% operating margins. They're now there. And then the next leg of this is that margins are going to go, in our opinion, to 35 to 40%. And hopefully they can, re-accelerate revenue growth from low teens to mid-teens. So story still got a lot of legs. We think stock's going higher.
So Brent, a lot to break down in what you just said, but sticking with your last point there on M&A, because like you said, activist investors obviously were pressuring Benioff, wanted him to cut back on some of his spending. So here we are with Salesforce almost a year later, and like you're saying, in a much better position than it was 9 months ago. So what do you think, how do you think Benioff is thinking about potential M&A strategy and what could be attractive to him?
Well, remember, they've been addicted to M&A. They've done so much M&A. They've done more M&A than most of the companies we cover. So they were hooked on a drug called M&A, and they had to go to rehab. So I think there's a lot that they could do. I think right now the number one area, obviously, is AI. Is there a tactical tuck-in or a startup that has great technology, doesn't have distribution, that they could infuse inside their platform? That would be number one. Obviously, number two, they've been very open about acquiring inside their own portfolios. So marketing, sales, service, you go through all these applications. There's a lot of point solutions in the front office that they could tuck in on that side. But if you, the number one thing for me would be a tactical AI tuck-in. Is there some enabling front office technology AI story that is out there? It could be, 3 girls and 5 guys and a dog, right? That as a startup that they could do as a tactical. But I don't think they can go out and do a Slack-like deal. Remember, that deal went completely sideways and they overpaid. So I don't think you're going to see anything like that. More on the smaller to mid-size than large.